All right, welcome back. Well, this is Corporate Radar. Markets up 105 points, and this is looking good. I just want to take a brief moment to tell you why. We already had the market open. The high was 17,410, where we are at right now, exactly where we are at right now. Then it had a sharp, steep sell-off. In about 10-15 minutes or so, we hit 17,362. But we've recovered from there. We've recovered very sharply from there, back to almost the day's highest point. After such sharp declines, there is a bit of a, if you're short, if you're long, you test the waters, you don't go all in. And so far, as both bulls and bears are testing waters in terms of where the market wants to head, it looks like it wants to perhaps drift a little higher. And that's why I'm saying so far, so good. But needs to be watched. Above 17,400 still. Prestige Group saw a weak set of third quarter earnings, but the management in its analyst meet has laid out some ambitious targets. They aim to double residential sales by FY26, and it also indicated that pre-sales will grow at 25% CAGR. To discuss, their kind of thinking behind these targets, we are now joined by Irfan Razack, Chairman and Managing Director at the company. Mr. Razack, it's a pleasure to have you with us here. Thank you very much. And congratulations, ambitious targets, and I think your shareholders will love it. But I have to, since I have you, I have to start with the here and now, Mr. Razack. Just yesterday evening, we had news that HDFC Limited, the largest mortgage financer, has increased their lending rates by another 25 basis points. After the last round of inflation numbers, most expect the RBI to effect another 25 basis point increase in their next meeting. And perhaps a pause after that, but who knows? Which means that consumer interest rates for consumers perhaps will move up a little bit more. Is that starting to pinch at some level, Mr. Razack, in terms of sales, etc., or not at all?
I can't just say rashly that there will be sort of no effect on this, but what the silver lining is, the rates have gone up quite substantially in terms of interest cost, but I think we've sort of hit the peak. And I always are optimistic. We look at this as a peak, and from here onwards, only thing that can happen is stabilize and maybe come down a bit. So it's a market dynamics, and the customer also understands this very well. There will be a little, sort of increase in the EMIs, or the tenure of the loan increases a bit. But that's not stopping the customers from investing for their home, and the buying continues. And we don't see any sort of slowdown in the buying. And as far as we are concerned, we are here to try and offer to our customers the best location at the best prices. So I think that's the confidence that the customer comes to us.
Okay. So when you talk about best location, all eyes are now on the NCR market, right? And Prestige is all set to enter that market as well. I mean, reports indicating that DLF sold, 1,100 flats in their project in just 3 days. And these are 7 crore plus flats. So tell us a little bit about what your plan is in the NCR market. I think you had a 3,000 crore target earlier. Is that the plan in the next couple of years? When will the rollouts be in terms of a timeline? And what kind of growth do you see there?
See, I mean, we're going straight to NCR. Yes, NCR is a potential market. We really haven't done any work there at all. We do have a project there which is still waiting for approvals. And only once the approval and the RERA number comes can we even think of launching that. We always, whenever we go into a new territory, we like to test waters, see how things pan out, and then set ourselves larger commitments. Yes, we are looking at both Noida and Gurgaon, but as of now, the situation is that we are waiting for approvals. And if that happens, we will definitely clock in more numbers from that market, and we are quite anxious to do that. But however, I would not like to ignore what we are doing in the other territories. Like in Bengaluru, the numbers are fantastic. We intend touching almost 10,000 crores in the next year itself. Yes. Hyderabad is a great market. We look at 5,000 crores coming in from Hyderabad next year. Mumbai is doing well. So we're looking at Mumbai doing another 5,000. So that itself totals up to about 20. And Chennai, yes, it's a steady, stable market. We are looking for a big approval there. So that will give us another 2.5. So these are the 3, 4 markets which will give us big numbers. Apart from the other southern states and some large transaction we've done also in Goa. Now NCR, yes, if NCR and Pune happen, these will add to the numbers and it will stabilize to our target and make us reach our target much easier than what it looks a big target. But if you really break it down and if you really plan it properly, it's not impossible.
Okay, all right. Hi, Mr. Razak. Good morning. You're sounding pretty optimistic, all across the country. So that's good news. Give us a couple of details then. Price increases, have you managed to push through? Interest rates are going up. As a customer, if I was coming to you and my EMIs are going up, then I would be wondering if Mr. Razak is going to push through a price increase, it will hit me harder. So are you able to push through price increases? And also, you have that journey of pre-sales from 12,000 crores, which are going to definitely hit in this year, to around 25,000 crores by 2026. Should we work the pre-sales growth in FY24 of around 25-28%? Very much doable?
Yeah, it is very much doable. The thing is, we've, like you rightly said, hopefully, inshallah, we'll hit the 12,000 number, which we had set for ourselves for this year. Maybe we would have crossed much more, but it's the approval process and the RERA numbers that have to come, so we can't launch before that. But however, having said that, the target that we set for this financial year, we will cross. And on this number, definitely you can look at least a 25% growth.
Okay, 25% growth. Got that. Can you tell us about the occupancy levels in the hotel business? Has it gone up further? Because, that space is booming as well. In Q3, it was around 70%. Has it risen further? And what is the growth that you're looking at penciling in for the hotel business? Any kind of expansion plans there?
Yeah, I mean, hospitality has taken off very well. And like you rightly said, it's 70% plus occupancies across all assets. And this is a combination of leisure travel, a combination of events in terms of conferences and other events that are happening quite a lot because there was a big gap during the COVID. And also there's a lot of celebration in terms of weddings and other stuff. So all in all, it's happy times on hospitality, which is across the board. I think all hoteliers are doing well and each one in their own segment. And yes, we are expanding. We just, in financial year, we opened the JW Marriott in Prestige Gulfshire. And
yes.
I believe that in April this year, we'll open one more small asset, which is called the Mulberry Shades, which is a pretty asset, which is a wellness center, again managed by Marriott, which will be a tribute portfolio property, which is a 100-room asset. And we are working on the other 2 Ws. And the largest asset that we are working on, which will get ready, and we are targeting for it in 2025, is the Aero City Hotel, which is the St. Regis and the Marriott Marquis. And I think work is going on there very briskly.
Right. All right, Mr. Razak, very quickly, there are reports that suggest maybe the smaller players are coming back in the markets that you operate. Have you seen any signs of that very quickly?
No, I believe it's an open market. I believe everybody has their own space and there's no such thing as competition. Everybody does their work according to their capacity. And while that happens, yes, there has been consolidation and the consolidation effect will keep going on. But there are many players who are doing very good work, decent work, and they'll continue to do that and they'll continue to grow. Everyone has aspirations. And as long as you're doing your job professionally and delivering to your customers, there's no reason why you can't succeed.
Mr. Razak, it may seem like an oddball question, but any reason to put out FY26 projections at this stage right now? I mean, it's good news. I mean, it gives visibility. And he does that. But what was the thinking behind doing it?
See, I think if you don't set yourself a target and a goal, I believe that you'll be where you are. See, we started, I think 4-5 years ago, we were at 2,500 crore sale overall. And that went to 5,000. And from 5,000, when we touched 10,000 last year, everybody said, wow, this is the only company that's done 10,000 crores top line sales in residential. And now of that 10, we said we need to up it at least by 20%, and we kept a modest target of 12,000, and that we are reaching. And I believe that's, unless you don't set yourself targets and goals and announce it, and I believe the entire ecosystem also needs to understand that. When I say the ecosystem, is the entire team within the company, they also need to start working towards it. Otherwise, you can't reach where you want to reach if you just keep all your goals.
Okay, thanks so much, Mr. Razak, for joining in and giving us all those details. Wishing you all the best in those ambitious plans. 25% growth is what you're guiding for FY24. Well, let's move on then. Let's focus on the power sector. We're joined by Mr. Prashant Jain, the Joint MD and Chief Executive Officer at JSW Energy. Hi, Prashant. Good morning. Thanks so much for joining in. Well, we're just in March 2023. But in Feb itself, the power prices, well, they flared up on exchanges. Now, 17% of your capacity is linked to the merchant market. How have prices moved in this segment? And where do you see this number headed?
Yeah, good morning. So, yes, power demand is going pretty robust this calendar year and this financial year. So far, we have seen 10% power demand growth, and that's where the situation is. And we are seeing early onset of the summer, and that's why you saw the power demand growth in the month of February also 7.5 to 8%. And you are right that our capacity is, we have quite an open capacity. We are having close to 900 megawatt of open capacity, which we are selling in the merchant market. To give you just a little bit of color, like today, 140 million units have been sold into the exchange market. And out of that, we have sold 20 million units. So it's around 15% market share.
And what is, Mr. Jain, good morning. What's happened to merchant power tariffs? And you'll have an overall bird's eye view. I mean, the government is also making efforts that prices don't go haywire like they did last year. What is your own projection on how demand is likely to grow and what it will do to prices this summer?
So prices are not very high at this point of time. Of course, in the context, you can see that, it's hovering around 8-9 rupees. But, given where the coal prices are, it is not as high as it used to be. And but we need to really see in terms of the demand, like we have seen 10% demand growth this year, which is close to 17,000 megawatt of the additional demand this year. And of that demand, only 3,000 or 4,000 megawatt equivalent new capacity has come up. And similar was the story last year. And no such big investments are taking place. India is the third largest power consumer in the world, which is growing at 7-8%. We are talking about energy transition. Here we are talking about meeting the demand itself. So that there is a big gap between demand and supply, and because of which power prices will remain, hard. And we are continuing to see strong power prices.
Okay, so power prices will continue to be strong. Mr. Jain, good morning. This is Sonia here. I'll come back to the core business, but I just wanted some clarifications on a news report that's doing the rounds that the company JSW Energy has submitted an expression of interest to buy a stake in PTC India. Is this true that you are interested in PTC India? If yes, what is the need for it? I mean, is it some kind of strategic fit that you're looking at?
Yeah, good morning. So we continue to look at various opportunities, and I do not want to comment on any specific opportunity in the market because we are a growing company and we see a huge opportunity in power sector in time to come. And as I was explaining that, the power sector is quite vibrant and there are quite a lot of opportunities where we are continuously evaluating. So we will continue to evaluate, various opportunities. For sake of record, you can expect that whatever opportunities on the table, we may be looking at it.
You confirm that you have submitted an expression of interest for PTC India, is it?
As I said that I don't want to comment on an individual asset, but we continue to evaluate all ongoing opportunities on the table.
But you're not denying it?
You can read it. As I said that we continue to look at various opportunities.
Okay, let's talk about the last opportunity you look at, the Mitra acquisition. By when is it likely to close? I recall when we spoke in Jan, you said in the next few days, the next couple of weeks, it's likely to get closed out. Has that closed out? And also in terms of the EBITDA guidance, you were talking about scaling from around 1,250 to around 1,650 crores odd. Does it get closed by the end of this fiscal? And 1,650 crores, should we see, in 12 months from there?
Yeah, for sure. I think this financial year it will get closed. Yes, there are, these are the complex transactions. You can imagine that each this particular asset is having close to 18 SPVs, and then we have to work on individual SPVs. So it takes a little bit more time, but things are progressing well, and we will be concluding this transaction in this financial year. And as we have also given the guidance that within 12 months, we will improve the EBITDA by 450 crore, that will be achieved sooner than what we have articulated.
Okay. Can you tell us how is the current health of the discoms? I'm just trying to understand that. What is the proportion of receivables currently? Any improvement that you've seen on that front? If you can share some numbers with us.
So I can talk about myself, about our company, that we do not have any kind of receivables and overdues. Our overdues and receivables are running, 36 months low at this point of time. So we are very much comfortable as regards to the receivable per se. But yes, there are what we are also reading in various articles, as well as we are talking to various industry sources. There are similar kind of a receivables due at this point of time, what it used to be 12 months ago.
Okay, no worries on that front. Good news. Final question, Prashant, before we let you go. Well, you all have guided for net profit of around 4,800 crores odd by FY30. Is there any change to this? And also in this guidance, are you incorporating green hydrogen and other energy initiatives in this particular number of 4,800 crores?
Not really. So basically what we talked about when we gave that guidance, we talked about by FY25, we will be 10 gigawatt a company and generating company. And also by FY30, we will be a 20 gigawatt operating company. And as we spoke last time also that our FY25 target, we are achieving 1.5 year earlier. And similar is the situation for our FY30 target. We will be achieving it much, much earlier. And so the profitabilities will be achieved much earlier, what we have guided for. And in addition to that, we are working on, the storage solutions and various other things. So those are the additional kickers. So we will be doing better than what we have guided for. So in due course of time, we will be coming out the revised guidance.
So 4,800 crores is on for FY30, and maybe it could be even earlier, going by the way you have ramped up, right?
That's right.
Okay, all right. Prashant, thanks so much for stopping by, giving us a fair sense on business. Appreciate you joining in, as always. Well, for the time being, though, we'll slip into a short break. On the other side, we'll get Mitesh Thakkar back with us. He'll give us a sense on the markets. We're trading well in the green for the time being.
Okay, welcome back. 100 points still. So good going, as I was saying earlier, and we're at 17,410. Just one unusual mover I want to highlight is Rupa and Company. That's the innerwear maker. 10%, 10.5% on the stock. That's at about 226. That's a big one coming through. Of course, I mean, like most of these companies, it's bouncing off extremely kind of oversold, not oversold levels. I mean, it's at the same level where it was back in 2020, August of 2020. So these have seen very large corrections, and you're seeing some bounces coming through as well. The other notable kind of mover is the entire Adani Enterprises, Transmission, Wilmar, Green Power. So more stocks in that group are higher as compared to lower. And I can spot a Ease My Trip, which is up about 5% or so as well. Market breadth is trending along nicely. We got about 1,400 stocks, 1,500 stocks higher, and about 600 stocks which are in the red at this point in time. Nothing large or unusual on the way down. There are many well-traded names like PVR, Power Grid, ICICI Pru, etc., which are down, but 1.5–2% cuts is what you're seeing there. Mitesh is with us for a quick check on things and what he would want you to do now. Mitesh, so we finally get the pullback, and I think all of us will be waiting to see if it holds. So far, so good. What do you make of it?
So I think, I think I would want to see the Nifty get past 17,450. I think that will add strength, and a test of 17,600, 650 zones could happen. Still not looking beyond that, but I think this looks like a pullback which could possibly see that happen. The reason is the Bank Nifty, I think, is slowly gaining strength, and the Bank Nifty, I think, has good traction, and if it starts getting past 40,650, 700, then I think 41, 200, 250 zones is a good target there. So overall, I think looks like a market, which could possibly give a stronger bounce back than what we have seen for the last many days. I have, in fact, two buy calls. HAL is something, which I've been liking for the last couple of days. It's come to support levels, even a good reversal. So that's a buy with a stop at 2,600 for targets of 2,700. And after a gap, I think, the public sector banks come on the radar. PNB is given a good reversal after seeing some correction and a pullback in the last few weeks. And now it can be bought with a stop below levels of 48.40 and a target of around 51 to begin with. But eventually, I suspect 53 could be a good target here.
All right, HAL and PNB. Thanks very much, Mitesh, for that. So I was mentioning Rupa. A viewer just messaged saying that look at Dollar Industries as well. So that's the other, in a way, company. That's up 10% as well. So, got Dollar Industries and Rupa both up 10% at this point in time. Nothing on Page, though, which is the leader. But, I mean, that's a different category. Premium, in a way, category, really. Markets
I'm trying
holding.
to say that people are sort of doubling down on their inner way, something like that. Is that the assumption? No, jokes apart. Another, space that's looking pretty good this morning is cement. So don't lose sight of that. We were telling you that coal prices are now down to a one-year low. And this is, of course, very beneficial for cement companies. Ambuja Cement, of course, in tandem with all the Adani Group stocks, Ambuja Cement, ACC are also moving higher, but it's a big move in other cement makers as well. In fact, talking about coal prices and the commodity markets, Manisha Gupta is joining in. Manisha, what's the one commodity you're looking at today?
Sonia, I'm looking at the gas prices because we've seen some gains come in for this one, 2% up on the week. For the month of Feb, though, we were down by 6%. For the year, we are still 28% on the weaker side. And from the highs of last year, we still are down by nearly 58% there. And this is exactly what we've done in this year until now. We started the year on a positive note at $3.6 per MMBTU. Actually, the end of December was above $4 as well, but we did see some declines by the time we started January. It was a warm winter to the beginning of 2023 is the reason you started to see continuous decline. We saw prices fall below $2 as well, currently holding at 2.8, but much lower than an all-time high that we saw in the previous year at $10 per MMBTU. So very high volatile moves is what we've seen in that space. This is the moves that has come in from the petroleum products and fuels that will hit all-time highs in 2023-24 is the view coming in from PPAC. They also say that we are dependent on imports by nearly 85% of our requirement. So the sense that our import bill is not going away anytime sooner is what the view is really going forward on that. I also want to put a view on the LPG gas sales that we have seen in India, and gas clearly is a talking point right now. So in the first half of January, we saw 1.24 million tons of sales in sense of LPG. Feb, same time, it has increased by nearly 12% to 1.39 right now. If you look at the February numbers, then on a year-on-year basis, we've seen 4% of gain as compared to last year. 14% up as compared to 2021, same time in Feb, and 21% as compared to 2020. So when you look at the LPG sales in India, especially for the month of Feb is the kind of data that I'm putting on right now, we have seen consistent increase in sense of LPG sales. Also take a look at what IEA says about the crude oil demand in India. 2021, we were consuming 4.7 million barrels per day. 2023, right now, it's more than 5 million barrels. 2030, the estimates is that we will reach to 6.7, and by 2040, we will be consuming 7.4 million barrels per day. So clearly, all of those numbers, whether it's about crude, petroleum products, LPG, naphtha, all of those numbers look very, very bullish. And as PPAC says, we are hitting record highs in 2023-24 is their estimate.
Okay, thanks a lot for that. Well, a couple of more stocks that do deserve mention. M&M is the stock on our radar. Now, there's been a big upgrade that has come in from CLSA this morning on M&M. Remember, auto sales are expected. They aren't out just yet for M&M, but the upgrade that's coming from CLSA speaks about very strong demand, both in the auto and the farm equipment segment. They've raised their target price to 1,619, which is a big upside to the current market price. They expect the SUV volumes to expand more than 20% in FY24, and there's a very strong order backlog, 266,000 units, because of which they are looking to increase their own capacity as well. Remember, the company has 6 new electric SUV launches over the next 5 years, so they are very keen to increase their capacity to 49,000 units per month to service the rising demand that they're seeing. In the tractor business, yes, there are concerns about the El Nino and the weak monsoon perhaps impacting numbers, but they expect tractor volumes to rise 13.5% year-on-year because of a strong winter crop production as well as prices. So that's M&M, one of the big movers today, up 2.5% in trade. Let's slip into a quick break. On the other side, our special segment, Indianomics. Lata will get chatting with a host of experts to decode the fine print of the GDP data that came in quite weak for the second quarter in a row, slowed down to 4.4%. Stay tuned.
स्मिता आओ बेसो